Afternoon, how are we all doing? Well, GDP was a mess, wasn't it? Didn't really do anything though. The most useless reaction to a GDP figure I've seen for a while. Afternoon, Seymour. Just had some news come in. NATO chief Stoltenberg, the alliance has observed indications that China is perhaps considering sending weapons to Russia. The West is using Ukraine to try and break up Russia. Interesting. We're getting a bit argy-bargy. We've got the PCE 4.3 on 3.9 for the US dollar. So that's positive. The GDP fell by 0.2% though. So a slight drop in the GDP figures. Not sure if I've got the update yet on the fundamentals. Yeah, it's come through already. So, yeah, so GDP down on the US. So, yeah, not great. But that doesn't really affect the buyer scorecard too much. It's all still pretty much the same for that. So, afternoon, Cam. Afternoon, Diamond, John, Papa, Fletch, Chris, David. How are we all doing? Evening outro. So looking through the US dollar pairs, got a bit of a whipsaw on the news there, but nothing much. Market hasn't really reacted to it at all. The London session has been terrible. If you look at just flicking through everything, there's your Asian session. There's your London session. We've had a very, very, very quiet London today. Asia, I thought, was quiet, but London, absolutely terrible. There's just no movement. So very little movement on anything today. We've had a little bit of a push against the yen, ever so slightly during London, but other than that, nothing's going anywhere, is it? We're sideways. It's been a bit of a sideways week, isn't it? If you look at everything, really, we're a sideways week this week. Nothing's really moving. It's almost like we're in summer trading. It's just flat. The whole market's flat at the moment, apart from the news events. So very, very weird movements at the moment. Nothing's moving, so, not really banking much. Not really going into drawdown much. So it's all a bit, crap, sideways. So quick look at the markets. The DAX this morning. That move that we had up, the breakout to the upside was the only move. So I broke even basically pretty much today. One of the other accounts made money, but one of them lost. So it's pretty much a break even. All we did was we pushed, broke, came back, and we've had a little bit of a movement to the upside. Not a lot. That's really the rally that you could have got, which is nothing. We've still got the gap to fill to the downside. And we've also got the gap down there on the NASDAQ and the S&P as well as obviously the Dow. But the Dow has actually sort of filled it, really. If you look, it's kind of done it. So it's tricky to sort of see what we're going to do this afternoon. We'll have a look, but there's no other news this afternoon. That's it now. We've got the G20 going on still. We've got UAIDA. I'm going to have to get used to saying UAIDA now. The governor designate who will be taking over the position. He's going to be speaking tomorrow morning, and then we've got core PCE for the US tomorrow afternoon. Apart from that, that's it for the news, really, this week. It's all a bit crap. So, really flat week, isn't it? But we'll see what we can get out of the Dow and the NASDAQ this afternoon. Obviously, see what happens when it opens. Afternoon, Philip. How was London? I was in uni, so couldn't make it. Flat. Very flat. Everything's flat. Nothing's moving. So we'll see what happens. We've got 3 minutes to the open. Very much the same as this morning, really, looking at through the sentiment. The Swiss franc pairs, they're starting to scale out a little bit on the Swissies. US dollar CAD, they're starting to scale out a little bit on that. But everything is virtually the same as we looked at this morning. Nothing's really changed. New Zealand dollar, US dollar was a good short this morning. What happened to that? Yeah, pushed down, pushing back up again now. Came down into that double bottomlet. It's just everything's just ranging, support, resistance, bouncing, isn't it? Dow looks like a good sell right now. Wouldn't sell it right now ahead of the open, but got to push up into the open. But yeah, everything's crap, isn't it? Nothing's moving. I'm just watching my my drawdown just fluctuating. Nothing's really doing anything at the minute. So yeah, there you go. Everything sideways. Banked $300 on the hedging account. Still sitting in 9% drawdown. Just seems to be a constant 9% drawdown on this, which is nice. But yeah, apart from that, nothing much has happened. Taking a few trades on the sentiment. Euro Swiss. Let me just quickly check this one. Euro Swiss, Euro Swiss. Where are you? There. 9909. Oh, that's a big round number. Oh, where is it? It's miles away, actually. No, it's all the way out there. Miles away. Right. Okay. Market's open. Well, it's not open, actually. Sorry. Just watching the Dow go crazy. I thought the market had just opened. It hasn't opened. We're just having a massive push at the moment. Right. This will be tricky pre-market today. You've got 1 minute to go, or 20 seconds to go. Your pre-market 15 is there. For some reason, we're rallying before the open. That's a weird move before the open, that. So we watch the Dow. Any news on the sentiment, EA? Yeah, it's in final testing at the moment. Gold was moving during the news. Yeah, everything will move during the news. It's a US dollar cross, isn't it? So it will move during US news. But it's just everything's just whipsawed. It's all you got, really, a whipsaw. 96, so just under half an ADR whipsaw. That's really all it's done. nothing moving. Funny old day today. Right, so if you're trading the pre-market, you're short on the Nasdaq, and the Dow is very volatile. Very volatile. An odd one. All over the place, isn't it? We'll have a look through the FX pairs in a minute, but there's nothing much changed since this morning. So looking at the ADRs, you've got one ADR today, which is Euro Swiss, which has come straight off with a hammer, a shooting star at the high, and reversed. That's it. ADR-wise, we've just got the same as we looked at this morning, which is CAD Swiss, which is an RSI extension on the hourly up there. But it's all it's done literally is just go up and down for the whole session. US dollar yen has extended on the hourly, but that's coming back down. It's only just got there. And US dollar Swiss. So this was the weakness in the Swiss franc, and that's coming off the double top. So there's potential mean reversion there on the 4 hour on the US dollar Swiss, which is also back up at the 72 look. And a double top. So that might come down from there. We might get a little bit of a pullback on the US dollar, but we'll see. But nothing much else to report today, really. So short on the Nasdaq. If you're trading the pre-market, you're short. 1.5 to 1 is going to be somewhere around there. So might be a nice little hit. Pre-market hasn't broken on the Dow. We're in inside bar. So 18. $27. So that would be your 1.5 hour, roughly there. Dow, breakout long, depending on whether your offset was big or not. Yeah, definitely in it now. So long on the Dow, short on the NASDAQ. Divergence again. Also taken out long on the NASDAQ. You shouldn't be in a breakout on the NASDAQ. NASDAQ hasn't broken yet. That's your 15-minute pre-market high. Whippy old open. Whippy old open. So no indication of direction at all yet. Off open. We might get a bit of a whippy one today because we've had a very quiet London. I was expecting New York to explode a little bit more than it is. Give it another 10 minutes or so, but seems a little bit undecided at the moment. Afternoon, Brian. Taken out short on the NASDAQ at break even. How are you getting taken out, Altro? You're seeing something different to me. Literally, in NASDAQ, all it's done, it hasn't hit the highs. It literally pushed up a little bit, broke the pre-market 15, and it's been hovering down here. How could you get stopped out? That's a really nice pre-market breakout short, that. This has got potential for a big profit, this one, if you took the pre-market. Unless you've got a really, really tight, like 10-point stop on it. Managing it on 1 minute. Ah, well, there you go. No, I'm not going to talk to you anymore. You're trading crazy time frames. Short on the Dow. Don't trade 1 minute. Might as well flip a coin every minute. You got just as much chance of making money. 5 minutes, not much better, to be honest. 15 is probably the best. Okay, so I'm short on the Dow. NASDAQ's still holding the lows. Still running nicely short. I'll put the crickets on. Pretty much guarantee I can tell you that it's ticking short at the moment. Nothing but shorts at the minute. Afternoon, Luke. Neo. More sells. Yeah, be short on the S&P as well. The S&P will be doing the same thing as the NASDAQ. Just about to get a reverse alert on the M5 on the S&P as well. Thought DAX would go short at the open this morning, but the first real move was long. Yeah. Yeah, I got a break. All I got was a break even on the DAX this morning. So I got entered short, stopped out, entered long, got taken out about there on a break even. So it's pretty much break even for me this morning. And then obviously didn't take anything after that. But the Dow's pushing back up. whereas the NASDAQ is still bearish. We've got a lot more strength in the Dow here, so be a bit careful if you are short NASDAQ. Hopefully the NASDAQ's in control. And we're going to get a rally, but if you've taken the pre-market, you should be out now with at least a 1.5 hour. And if you're trading the double entry, you're, wow, nicely in profit. Lovely breakout. Why is the Dow not going? Come on. Why is it always the instrument I choose that doesn't bother to move? You watch, we're going to tick up now. All the buyers are going to step in now and undo that NASDAQ move, and the Dow's going to fly out the top. This, we got 1 minute left, but this is your 10-minute opening range. So not really managed to get out of the pre-market range yet on the Dow. NASDAQ's doing very nicely. Is anybody trading? So the S&P, obviously I've got no set files for the S&P. I have not back tested on the S&P at all. I just chose the NASDAQ because obviously with the opening range breakout EA, the NASDAQ faster. So I just used that as the instrument. But I'd be interested if anybody's done any testing on the S&P, because the S&P just moves the same. But if you look at them, obviously the ADR on the S&P 500 is 58. When you look at the NASDAQ, ADR is 239. So that's the reason I chose the NASDAQ as the instrument for US based on ADR, and obviously the Dow, because the Dow is 454. So I chose basically the two high volume instruments, but the S&P obviously moves as the NASDAQ does. So I'd be interested to know if anybody's making money with the opening range breakout on the S&P, because it's very much similar instrument. There's your 10-minute opening range going in, so I'm going to add to the short on an entry there, right in this propulsion gap though. So market structure at the moment is we're in an expanding wedge. Very difficult to trade expanding wedges because there is no structure at the moment established. So at the moment we've got 50-50. It could go either way here. There's no established structure. NASDAQ is looking a bit more long at the moment. But we haven't had any sellers come on, any buyers come in yet at all. It's been nothing but selling since the open. So here come the buyers. Yeah, this is what I was afraid of. This isn't the move. I think we're going long. We'll see. I mean, we've obviously had a very nice flush to the downside, but there's a lot of selling there, and we haven't actually made any progress. Look. So all we've done is managed to pull back. So we'll see if we get any selling in here. If so, obviously that will help to push it down, but otherwise I think we might be a bit struck. What is ADR, average daily range, Gordy? Yeah, so it's ADR is the average daily range of the instruments. So it just tells you what its normal movement is. So this is what the ADR dashboard's for. More sellers coming in. Short twice on Dow now. So this is the ADR dashboard. So this basically alerts you when an instrument hits its average daily range. So you can look for mean reversion opportunities. So Euro Swiss. Yeah. Oops. So from there, from that low to that high is 441 pips, which is its average daily, is its ADR, average daily range. So when we get to average daily range, often an instrument will exhaust. Tricky open. Looking short still, but not very convincing, is it? So I'm short 2. We've got 2.5 minutes left on this candle. At the moment, that is the 15-minute opening range. So any movement outside of that range, I would say, is probably the speculative move of the day. This is the initial cash balance going in at the moment. So I'm not hearing a lot of buying or selling really at the moment. We just seem to be transacting. Sellers are struggling. There's no real movement on the US dollar either. We're not really going anywhere. I've got a feeling this might be a whippy one today. We'll see. So we've just traded straight into that propulsion gap, which has been filled. Doesn't seem to be very convincing, though. I think we got difficult one. This one, I think we probably got a short on our hands. If we can crack that low, don't forget we've got the gap fill to do on all of these as well today. So we're so. I mean, the Dow's pretty much done it, depending whether you class it as the wicks before or you class it as the actual close. But we've certainly got a gap fill available on the other instruments, so it's got a very good chance of dropping today, but we'll see. There's your 15-minute range on the Dow and the Nasdaq. So let's see where we go from here. Here come the bulls. So the Nasdaq is just putting an inside bar. So you could take a break of that inside bar, long or short, and then add long or short on the break of the 10-minute candle. Okay, so there's your break. So see whether we get any sellers stepping in at this level here. Don't think so. Looks like it wants to go long, doesn't it? We'll see. There we go. We tap straight into that, rejected. See if we've got any more sellers sitting here. If so, we might be starting new leg down for the lows. Stopped out on the Dow, long. Okay. So it looks like we're going long. Let's have a look at where we're off to. So yesterday's high, really close. We've only got 30 points for yesterday's high. Other than that, it's exactly the same as it was yesterday when we looked at yesterday's session. Yeah, we looked at where we were going if we could break out to the high. So we dropped to the downside, pushed back up straight into those highs. Obviously, that is where we could potentially end up today. If we break that level there, very difficult to pick a spot. There's loads of buyers coming in. It's definitely a long today. Nasdaq, I would go long if you get out your shorts, go long. If you are short, difficult to choose where we're going today, isn't it? So we've got this propulsion gap. So this is where the move started in New York, in the New York session on Tuesday. That was the initial move. We came and tested that twice, pushed back down. So this propulsion gap out of this accumulation after lunch in New York pushed all the way down to there. We've tested that twice. This is the third test. So if this breaks, we've got a run basically all the way up to that propulsion gap and up to that support. So you'd be looking somewhere up in that area there. So 33,437, which is a 190 point run to the upside potentially. So a nice long run up. So depending on obviously how you want to play it, if it's going to go there, obviously we've got to break this high first, which at the moment it's just obviously you see load of limit orders are just triggered here. But if we can break that high, that's where we're going. If we fail to break that high, coming down to yesterday's low. Let's see where we go. Anybody got any pairs they want to look at? I covered a lot of pairs this morning. Went through all the sentiment trades, but nothing's really moved. Nothing's changed on the buyer scorecard because nothing's moved. So there's not really a lot else to look at. There was no ADRs this morning, apart from Euro Swiss, which we got during the London session. There was no RSIs apart from CAD Swiss, which we looked at this morning. So obviously where we were when we looked this morning, we're like that far ahead. Nothing's gone anywhere. So if anybody's got any pairs they want to look at specifically, let me know. But there's not a lot else really to look at. CAD Swiss, yeah. So CAD Swiss hourly RSI extension to the upside. We've got this nice resistance coming up here. So that's where I'd start to look for sells, which is 125 ADR. So we're nicely extended on the hourly. We're either going to get a lower high, so high, low, lower high, lower low, lower high, or double top really, lower low. Yeah. So that structure there is in play. Or we're going to push up and we're going to double top. So with this one, CAD Swiss, I'll be dropping down now because we're extended on the hourly, looking at M5. Take a reversal alert short there, or better still, wait for an ADR hit and get in a reversal alert up there. That would be the best place to get in, anywhere above ADR. But if it's not going to make ADR, you need to get in now. So obviously looking at it on the hourly, that's kind of the structure that we're in. Or just ignore that bit and just look at that. So difficult. You could either get in now or wait. If you get in now, basically, if it's going to do the lower high thing, that's it, isn't it? We can't break that level. Therefore, this is the lower high. Therefore, this is the turning point. So M5. Entry 1 there. Plan your second entry up there, which is 24 pips away, which is half an ADR. So enter 1 there, enters 2 there, and then get out on the drop. Be extended on RSI on the hourly. And if it does push up into ADR today, you're going to be even higher extended. Here come the sellers. Oh my God, this is going to be a whippy one today, isn't it? So I'm... No, it's not break even, is it? I was going to say, that's my three positions short. We're running into a bit of a resistance here. So this is the propulsion gap. Oh, sorry, this is the double top that we're running into now. Yesterday's high. So limit orders are triggering all the way up here, holding price down. So we'll see if we can get we need a nice big tick up and a pop. Eat all those shorts. Come on. There we go. Let's push through. So now I'll be watching that high and this propulsion gap that we're about to place. So this is going to become a propulsion gap. That is the high. So we're either going to get a pullback into that high, into this propulsion gap, and then a rally, or we'll just rally, either or, don't care which. GU, Nasdaq will be doing the same thing. Oh, Nasdaq hasn't made it yet. Look. Oh, this is dodgy. Okay, so Nasdaq's stuck in a symmetrical triangle. So when we get a pullback on the Dow, we're going to pull back on the Nas as well, back into here. Either that or the Nas is going to rally, which will push the Dow even higher. So we might get a really nice run off of this one. We've got a lot of buying. We're not making any progress, though. This could be dodgy, actually. So we're running into this balance here and there. So with basically everybody that's tried to short that has just been eaten. So I'd expect us to probably pull back now into the propulsion gap and then get another leg up. GU. So pound is a massive short at the moment. Basically, we haven't got accurate, up-to-date data on it because there's an issue with CFTC. So the data for COT is delayed at the moment by 3 weeks, be updated tomorrow. So at the moment, we were, last time we got the update, short pound US dollar. So the market is short the pound and they are long the US dollar. So we want to be taking shorts. There's no retail sentiment and all fundamentals are against the pound. So you want to be selling pound US dollar at the minute. It's not really going, nothing's really going anywhere at the moment. But you had your entry on Tuesday on the RSI extension to go short. So at the moment, we're just kind of flagging on a big flag. Yeah, so I'd just be looking for a continuation short. This is kind of where we want to be getting in. So any pushes on this, you want to be getting in short on M5 reversal alerts or M15s. So you had one there yesterday. There's a big, horrible one. Some sellers coming in now. Or just wait for it to push up and take an M5 short. There. It's a bit whippy at the minute, though, isn't it? Or wait for the Asian highs to get swept. Getting short up there. Or if we push back up into that propulsion gap, in which case then you'll be a little bit extended on the M5. Yeah, so just look for short entries at the moment. We're coming out of this propulsion move. So remember I said when we had this move up on Tuesday, when we had the PMI figures, I didn't believe this move to be legitimate because the PMI figures, yeah, they are an important indicator, but they're not that important. So having a rally of that strength, I think we had almost a 200 ADR move on pound US dollar. 124 is ADR. We got 160. So we got 150 ADR move. It wasn't real. As you can see, it's all pulled back straight into the propulsion gap because the pound is not strong enough. Even PMI figures being positive is not enough to push the pound at the moment. There's too many negatives for it. So all the pound pairs are, I think, shorts at the moment. Some have come down further than others after the move. Apart from the Swiss franc. Swiss franc looks like a lovely entry now, actually. So we've just taken out that high. So high of the week is gone. This week's high has been taken. Yesterday's high, where we double topped. So everybody that's shorting this and is mean reverting that move has just been liquidated. So there may be another leg to take out everybody that's gone in on the stop run. So looks like a good area to start looking for reversal alerts short. About to get one there. Really nice tweezer top rejection. So just wait for the next reversal alert on the pound Swiss. Looks like a nice short. That's 50% retracement on the move as well. Up there. So if we can get another move up, that'd be lovely. But somewhere around there anyway. Looking for shorts. But we have got all of this propulsion up here that hasn't been tested yet. There's a lot of it. So New Zealand dollar Swiss has just hit ADR. We're really struggling on the Dow. So yeah, New Zealand dollar Swiss ADR. Sellers coming in. New Zealand dollar Swiss is range bound, slightly long. It's really mixed at the minute. Not going anywhere. Difficult one. Oh my God, there's loads of sellers. Okay, so this is the pullback. So we want to test this propulsion gap. Ideally want to test that wick. I ideally don't want the propulsion gap because that's going to stop me out, but hey, I'll get in again. Here we go. Oh, it's a real battle going on up here, look. So yeah, that's GU. Kind of just looks like a new propulsion move on the downside. On CAD Swiss, no, maybe we weren't talking about CAD Swiss. Had a nice reversal on EU this morning. Yeah, I wouldn't. I'm not longing in anything against the US dollar at the minute. The US dollar's strong. Although saying that, now we've had the negative GDP figure, we might start a pullback on the US dollar. So we'll see. It certainly looks like it at the moment. The indices are starting to rally. So, or trying to rally anyway. It's not really getting anywhere, is it? So we might get a pullback starting on these US dollar pairs. But we'll see. It's not really going anywhere. You can't really tell anything at the moment. It's, you know, we're not going anywhere. It's all a bit flat. Has anyone ever looked at trading pre-news ORB? I have tried and failed. The trouble with trading pre-news is whipsaws. So if you look at the, mind you, the US dollar didn't do anything today, did it? Where are we? 130. So what's that? That's 330. So the problem is a lot of news, you'll get a big candle, which will often take out both ends. So if you were, if you were going to trade pre-market on this, you would take the, I mean, it's up to you how you want to use it, but the opening range breakout EA can be used to trade news. You can either use a 5-minute range, depending how big it is, or the 15-minute range. And obviously, in this case, you would have broken short and got a nice 2-to-1 short on it. Okay, so we're just coming back in to test that wick now and test that propulsion gap. Let's see if we get some buyers coming in here. So market structure is long. at the moment. Yeah, and as Luke's, I was just about to say, as Luke's just said in the chat, the other problem you get with news is slippage. The spread widening, depending on your broker, obviously, but the spread widening can be vast on news. So what you end up doing is if you were to take a 5-minute opening range, for example, and price was here, yeah, at the news, they will, oh, my bloody feed again. What is going on with this feed? We haven't actually managed to break down any further much, so we're still on this wick. So yeah, if when you get to here, if you opened here, the likelihood is the spread will widen dramatically and take you into a short position, even though the market hasn't actually moved. And then if you whipsaw long, they will spread you out at the highs and take your stop and then move it down. And what happens is all you're doing is you're entering a short, stopping out, entering a long, stopping out, and moving down. So you basically get taken out of both ends of the position, and it goes down there. So that's the problem with news trading, is basically the whipsaw and the spread. So you can try it. Some news you'll get absolutely fine. You know, some news events, I'm going to get stopped out on this by the looks of things. There's a lot of selling pressure. Looks like they're going to be able to fill the gap. We will see. Hopefully they'll shut up and go away. So yeah, try it, is all I can say. Some news events, if you took a 15-minute pre-market, for example, which would be there, and it opens there, sometimes you will just get it literally bang, and you get a huge candling, like on non-farm payroll, for example. But you will not get an entry there. You will get entered somewhere down here. So you'll get slipped quite a bit. So again, you have to be careful with trailing stops. If you've got tight trailing stops on news, you can quite often get stopped out very quickly, even though the price never gets anywhere near your stop because of the spread. So there's lots of downsides to news trading. Try it, but try it with small risk, I would. Right, there's a lot of sellers coming in at the moment, but we are holding our ground here. The buyers are absorbing all this selling pressure at the moment. So we've got a good chance of putting a new leg in. We'll see if this continues. NASDAQ has actually pulled back much further. So NASDAQ didn't actually manage to make that high. So we are, at the moment, sitting in a symmetrical triangle. Jesus. Nearly stopped out there. It's only a small loss, that 0.16%. It's not a lot. Big moves again today. Big long candles stopped out. Tiny loss. Turn the crickets off for a minute. Not a very nice open today, is it? 5-minute RSI divergence. What are you talking about, Brian? Oh, EU? Yeah. It's come all the way back though, isn't it? So it's not gone anywhere. Okay, I'm going to enter another long attempt. So we've filled the propulsion gap, retested that wick. So we've got 2.5 minutes left on this candle. If this candle ends up bullish, I would say this is probably just the pullback on a long move, but we'll see. If they continue to sell hard into this, we may be going short again. Nasdaq's now made a new low, so we've got the reversal alert on the Nasdaq. Well, not yet. Candle hasn't closed yet. So there's your M pattern reversal. So huge divergence across the indices today. Looks like I'm going to go short. Oh, it's undone the whole movelet. All that open. All gone. Whippy, whippy, whippy. At least we haven't got John Wicks today. Okay, pulling back again. So that, where am I? RSI, ADR. New Zealand dollar Swiss ADR that we just got. Is coming off nicely off of that double top. So M5, you're about to get a reversal alert on that very, very shortly. Nice stop run on all the shorts entered during Asia. So hopefully we'll just get a retest drop back down into this propulsion gap on New Zealand dollar Swiss. So that might be a nice ADR reversal to take. I should be taking that one. There's no bias really on this one, New Zealand dollar Swiss. So it's kind of range bound, bit long, but we want to go be short. Want to be short on it from a sentiment perspective, so you can trade it either way. Okay. Right, so pulled right back in a bullish move on the Dow. See what the Nasdaq's up to. So the Nasdaq's just given the reversal alert, literally, by a micro pip. So I would say this candle is quite key. If you're not in yet, a break of that candle will probably give you the direction for the next move, I would say. So I think this one's going to decide direction for the afternoon. Nasdaq's running the lows. So having a look at the Nasdaq. So yeah, so this is going for the gap fill potentially. So run down from here, about 65 points. Dow's not. We're getting real. You know, these are massively out of sync at the moment, aren't they? Dow's just not able to get down. No John Wicks, but apparently I'm still using useless retail trading charts. You must have paid a fortune for the commercial. Yes, footprint charts, love them. I bet we get him. Let's have a quick look at. What do you mean stream starting soon? What? Why am I still on stream starting soon? Ah, that's weird. Catch up with myself. I was going to say, I was going to go and look at one of my videos and see if we get him come up. Yes! Look at that. Couldn't make it up, could we? There he is.
Useless retail trading charts like this.
Useless retail trading charts.
Trading immediately. Just
Stop.
Unless you enjoy throwing money down the drain, of course. Now this is what real fun.
You should be using my useless retail trading charts because my useless retail trading charts are different to your useless retail trading charts, because they have numbers inside of them. So they are different useless retail trading charts.
Financial institutions look at when trading professionally. They can see real.
That isn't trading professional. No, there's no banker that's ever sat there in front of a screen like that, I'm sure.
Are not even comparable. This is just gambling. This is proper trading. I should know. I spent years trading for one of the biggest banks in the world.
Yeah, and I know someone also that works in Barclays, and he's never seen a footprint chart in his life. Anyway. That was good, isn't it? We get near Av pretty much every time, don't we? Love him. Shouldn't take the mickey. But it's fun. Right. We're not going anywhere at the moment. So this could turn into a hideously whippy session. We kind of stuck. We are looking bearish, but we're looking bullish and we're looking bearish. So I'm none the wiser today. It's a bit of a mess, isn't it? I think the bankers do what we do, just with different software. Exactly, yeah. They use footprints, basically. Apparently. No, they don't. None of them I know do anyway. I don't know. I might be totally wrong. I don't know. But the people that I do know that work in banks have never seen any chart in their life. They're not interested in that. What do you need a chart for? If you've got enough money to actually press a button and make this thing put a bullish candle in, why do you need a chart? You're not going to watch a candle, are you? Go, right, tell you what I'm going to do. I'm going to dump 20,000 contracts long on the Dow now. Whoop, hey, look, I just painted a green candle. Okay, shut it. They don't do that. They're not doing that. They're basically got to execute orders at the best price possible. And that's it. So they watch the ladder and they basically just keep executing every time it pops down. But anyway, maybe it's a different desk. Maybe I'm totally wrong. Probably am. Anywho, so we are rejecting on the NAS. We just rejected these lows. And now we're trading back up into that propulsion. So that's about as much clue as I've got on direction today. So the initial move, we're still inside it. We're not going anywhere at the moment today. So this is your pre-market. So your 5, 10, 15 break. The initial break move failed, and we didn't manage to get back out the low. So all we've done is we've just reset ourselves. So we've sat here for half an hour watching nothing. Price ladder, yeah, Papa. So you've it's a bit like this. It's depth of market. The DOM basically is what you trade when you go and work for an institution or for a prop firm or a prop desk in a bank. They give you a ladder and you watch the DOM, the depth of market, and basically they teach you how to watch price movement. And that's basically what the speculative desks use. But they don't use a stop loss or anything like that. But the longer term desks are not looking at ladders either. They're just executing orders. Don't pay any attention to it. Everything is made up for retail. Everything you see, every piece of software, MT4 included, it's all built for retail trade. It's all built to allow the people at home to put money into the market for the banks to take. That is literally the only reason all of the software exists. Jigsaw exists to allow you to trade futures and give the money to the banks that way. Yeah, so that's what it's all there for. The banks don't use any of it. The banks use Bloomberg terminals. We can't afford Bloomberg terminals because they cost $2,500 a month. Yeah, but a Bloomberg terminal looks very similar to a ladder, and the charting that they use on Bloomberg terminals is line based. So they watch line charts, so they can just see where price has been and forecast where it's going, and they use scorecarding to decide which direction to place their orders. That's literally it. It's such a simple thing, which is what we do with position trading. It's the same thing. There's also evidence of him on MQL5 asking for desperate help with an outside bar indicator. Is there? I didn't know that. I don't know. I don't hold grudges against anybody. I just, it's the ones that are on YouTube all the time. The adverts you see on Facebook and YouTube all the time. It's the same people selling the same courses, and it's all the same thing, recycled into $2,500 worth of education you've already got. That's why I don't like them. Not because I think they're good, bad traders or what. It's just, same stuff, isn't it? I'm praying for pound Swiss to come down. However, the Swiss is weak. Yeah, Swiss is weak today. We're really well and truly stuck on the indices at the moment. I've just gone long again on the Dow. So hoping basically this is the market structure for the day. Yeah. So we're low, high, higher, low, higher, high, higher, low, looking for the higher high form. If you're short on NASDAQ, you're praying the opposite, basically. You're high, low, lower high, lower low. You're looking for a lower high. Either way, I'm looking for it to go up at the moment, but it doesn't seem to be doing anything. We're struggling for any direction whatsoever. So pound Swiss, so all your Swiss francs basically at the moment are very, very weak. Sentiment on the Swiss franc at the moment. You've got everybody. So Aussie dollar Swiss, everybody is long. CAD Swiss, everybody's long. New Zealand Swiss, everybody's long. Yeah, so everybody is basically hitting the long button against the Swiss franc at the moment. So they're all doing all right at the minute, but all the liquidity they're putting into the market right now is being put into this downside. When the Swissy powers up, it tends to really go for it. So I wouldn't worry too much about the Swissies. They move very nicely. There's a beautiful reversal alert. That's the ADR Euro Swiss alert. There's your retest. Short. Back down to the lows. So they'll come down. What do you mean precision? What do you mean precision trading? Precision trading? Never heard of it. What's precision trading? WB trading, William Brown always pops up. Oh yeah. Oh, what do I mean by the same old advert? So it's Nirav, his course, and Greg Secker. The ones that advertise on YouTube. YouTube, it's not cheap to consistently advertise like that on YouTube. How could I predict that when I went to my channel, an advert for Nirav would come up? Because it does it every single day. He advertises to me every day and has done for many, many, many months, 6 months. So he, just advertising to me alone, he's probably spent $200. Yeah, that's why they sell courses for $2,000, because they make all their money. Greg Secker has a plane, a nice pool, multiple houses, a Rolls Royce, a helicopter, all paid for by software and courses. No trading. He's never shown any of it. WB trading, he comes up all the time. And that's the one, isn't that the one that goes, I'm really bad at trading. And then this happened. And he shows this one trade which went well. And he's like, come on. I don't know. I've just seen it all so many times. I'm immune to it all now. This makes me laugh. Anyway, we're not going anywhere there. So let's have a run through of all the currencies, shall we? Because the markets have decided to do nothing so far today. And obviously what we're looking at here shows you that the markets have decided to do nothing today on the FX market as well. But everything, if we look at it on the hourlies, we're really, really range bound on everything this week. And we have been really for a couple of weeks on most things. The only movement really we're seeing is very, very, very slight channels and a lot of up and down. So literally everything at the moment, it's kind of irrelevant whether you take it long or short, which is probably why the hedging set file is doing so well this month. It's killing it. Because everything is literally just going up and down, and this thing's just constantly banking money, which is great. But I don't see any real direction in anything at the minute. The US dollar is the only thing I'm looking for strength on, and also on the euro. But at the moment, as you can see, we're struggling to make lows on Aussie dollar CAD, and we're making lower highs. So we're forming a wedge, which should usually break to the downside. We've got this big propulsion gap, which we came and tested once, not gone anywhere. So literally this week, all we've done is move from there down to there. And basically the week before, all we did was move to there. So it's all just basically sideways. So looking at the bias scorecard on all of these, like the Aussie dollar CAD, range bound, yeah. So anything that you see range bound on the bias scorecard, there's no fundamental or institutional or retail drive in any direction at the moment. So you would expect things to either go range bound, and obviously the range size will be dictated by wherever the highs and lows are, or we're going to get the channels forming, which you can take highs and lows on as well. So no real directional bias there. Aussie dollar Swiss, same sort of thing. Yeah, Swiss franc I would imagine will power up very shortly and drive that back down again. Not quite extended on the hourly. You know, you haven't had any signals on it. Look, it's just not moving far enough, fast enough. The only signals you've had have been longs, which have played out nicely. So nothing moving there. Aussie dollar yen, all the yen pairs are sideways. We've got completely stuck with all of the yens, all in very nice big wide ranges. We have broken to the downside now. You can see we've got a reversal alert there. So there's a structure break to the downside. So potentially, I think we are starting to see some strength coming through on the yen. So happy to short anything yen. However, the market is the opposite way at the moment. So, you know, very, very tricky. Big Papa, he is filming himself at the balcony and tells you to ignore the camera reflection you see. The William Brown in the UK. Yeah, I don't know. There's a lot of people, I see a lot of these adverts coming up on YouTube now, where literally people are using their mobile phones and they are filming themselves saying something to sell something. And it's the cheapest possible advert you can get, isn't it? Because it's like me holding up my phone in front of myself and going, hey, you're wasting absolute fortunes doing courses, because I've got a free one on YouTube that teaches you how to position trade the same way as the banks do. Come and watch this. And that's it. That's my advert. If I stick that up on YouTube, a load of people will land on my website. But that's what people do now, isn't it? They just talk into their phones. And for some reason, we listen to them and click on these ads. There's absolutely nothing, no substance to any advertising anymore. It's all got to be done within 5 seconds, isn't it? Bizarre. Advertising's changed an awful lot. WB is the one who buys the market at 7:15 a.m. Oh, he's that guy, is he? Oh, yeah. Oh, no, WB, he's the one that goes, everybody that's used my mechanical trading system has passed FTMO. This man, so-and-so and so-and-so, passed first time. This man, so-and-so and so, passed his account and is now funded, blah, blah, blah. Yeah. So basically, what's he doing? Opening range breakouts. So he's basically taking the 7:15. Oh, so he's doing pre-market breakouts, isn't he? Yeah. But yeah, it's all the same. Like I say, everything's the same, isn't it? There's not a lot of ways to make money in the market. All that these people are doing that are selling courses, they're trying to repackage the same thing and make it look as different as possible, because if it doesn't look as different as possible, no one's ever going to buy it. They're not doing it, are they? Anyway, FTMO passing using mechanical rules. Yeah, well done. It's called an EA. Anyway. Oh, God. Trading education. Got nothing better to talk about because the market's not going anywhere. Aussie dollar yen stuck sideways, looking for shorts. All these yen, I'll run through all the yen pairs, but basically, if you look at the scorecard for the yen, it's all over the place. But overall, everything is slightly positive towards the yen. We've got some buys here for the euro yen, the New Zealand, and the US yen. The US yen probably, but with all of this, it's going to be intervention on the yen. All of the interest rate figures that you see, which give a +2 to all of these pairs, is false because the yen does not change its interest rates from -0.1. So you can kind of ignore all of this and take 2 off of all of these. When you take 2 off all of these, they all become either range bound or shorts, really. So I would be looking more for short plays on all of these, just because when they decide to flick the switch, it's coming down fast and hard. So they're all stuck sideways at the moment, meaning no currency has got enough strength to beat the yen, which tells me that we've got a very strong yen and they're just holding the currency in its current place, waiting, I think, for that break to the downside. So we've had a buy cycle and they're fed up with it. They're not having it anymore. They're going to start a move to the downside soon. I think that's what we've got coming. The pound is the only one that's made a break, and that's because of the news, the PMI figures, where we got that 150 ADR move, and now that's failing. So if we can break back down below this level on the pound, that brings it back down in line with everything else, ready for that drop. We've got an orphaned propulsion gap all the way back down here for about 2.5, 3 weeks ago. I see that as potentially being a target. New Zealand dollar yen, we've got a gap here. No reason why we shouldn't break that. So that is the propulsion gap that broke the range, downtrend. We should be coming back and testing that. US dollar yen is the only one I think might be able to hold up, but it will still come down when the yen powers up, but it will probably just do something like that. Whereas the others will probably come down faster and harder. I don't think we're going to get back here. So all those yens basically, very difficult to trade at the moment. Aussie, New Zealand, that's come down very nicely. As I said, I'd like to see it back down here for buys. But it seems to be bouncing here at the moment. Haven't had a reverse alert on the hourly, so it's not got enough strength. You know, it's not moving today, is it? At all. So we've been conditioned by Instagram and TikTok to consume short, direct videos. So these guys are just doing ads the way that make them seem like influencers. Yeah, you know, that's true, isn't it? Yeah, maybe I should do one. We're totally stuck on the Dow. Absolutely stuck. 20 minutes now. Unfortunately, though, it's looking like it's forming a bearish wedge. Oh, this is a horrible market today. This is going to be my last trade, I think. Whatever move this makes. So it's just not playing ball today at all. Do I see EJ testing the highs again? Possibly, yeah. So the market is short euro yen at the moment. So the liquidity pools are sitting at the highs. That's only an ADR. Well, it's 1.5, 1.25 ADR away. So, you know, good couple of, you know, big strong push. There's no reason why they couldn't just come and take that liquidity. However, since yesterday, it's starting to look a lot more bearish, isn't it? We've managed to break that low. Yeah. We've come back down and retested it. So this is key here. If we break this low now, I don't think we'll get back up here. We'll probably come back up here, but I don't think we get back up to the top. There's too far to drop on this. However, we've got a very strong euro. So, you know, the euro and the US dollar are the two currencies at the moment which have got the most fight to put up against the yen. But, you know, you look at the yen. When the yen wants to go, it will go. There's nothing you can do about it. When they intervene, it just collapses. Yeah, as soon as they start a move, it goes fast and hard and sustained. So you can't tell. And this is why I like the yen pairs short because we know they're intervening now. They've been intervening. They've admitted they've intervened. They initially said, no, we're not. And then they can now come out and say, we are. What happens is when there's an intervention on its way, you hear from the Bank of Japan on financial juice, you'll get a BOJ come up. And basically, it will be Kuroda saying something like, we are watching the FX market movements closely, or something along those lines. Yeah, they haven't said anything at the moment, but that you'll get something like that come up. And basically, whenever they start watching closely the FX rates, it means that they're not happy with the amount it's moved against them. So they basically intervene. So you know they're going to do it. So it makes more sense to me at the moment to be sitting on short positions with the yen, because it's a fight. It's a real battle to make any headway. Look, we had that flag there, broke, hardly got any headway, pushed all the way back down again. Then we've pushed up, and it's taken like 2 weeks to get to that level. In 2 days, they've undone 4 days worth of price action, 5 days worth of price action. Yeah, whenever you get a strong yen, it just hammers it. So I'd just much rather be sitting on short positions on it, because when it goes, you know. And look at the space below. There's just so much fresh air to just go through when it breaks. So oil looks like a great scalp for shorts. Right, so it's gone. I was watching this morning, thinking this looks good for a long. I didn't take it. Again, I was waiting for it to get back down here. You know what, this thing, every time I've looked at oil, I've picked a level and I said, if it gets down to there, I'll buy it. And I did the same thing here. I said, if it gets down into here, I'll buy it. It missed me by that much. It missed me by that much, Taylor. I said I was waiting for an ADR alert on it. Didn't get it. It's gone. But I'd be looking to buy it, not short it. Possibly scalp it. Yeah, I mean, there's a good scalp potentially there. For you're not extended on the hourly. 15-minute, you'll be extended in 30. But yeah, scalp short back down into there. Very quick play. I'd expect the support rectangle to hold price up for a long. I'm waiting for this to push. You've got oil inventories coming out in 25 minutes. So just be aware that in 25 minutes, this thing's probably going to take off in one direction or the other. So you've got oil news in at 4 o'clock. Aussie dollar, New Zealand dollar, switching through all the pairs. So we've looked at this one. It's short at the moment. This is a much bigger move that we're currently in. So I'm expecting that break to the downside to continue that move. We've got a slightly weaker New Zealand dollar now. So yeah, I would expect some kind of pullback and then test. I want to get long here. I don't think it's going to come down like collapsing. I think it is going to go short overall. But if we can get down, back down into this area, I think that's a good area to start buying it up and then pushing back up into resistance. It might go from here. If it goes from here, then that would be a nice short. So looking to short it from there, looking to long it from down there. This area, though, however, is actually a nice little long opportunity as well. So either or. After having seen your bootcamp series, I would like to try out one of your strategies. Which strategy and indicator would you suggest a newbie try out? Also, should you do this manually at first? It's up to you, John, really. The best strategy to start with, I would say, is just a mean reversion. So using the RSI. If you're just starting, I would use 4 hour. So watch for 4 hour RSI extensions. So indicator wise, if you're going to get if you want to buy indicators to help, then the RSI dashboard is going to alert you. There's 2 ways to do it. It's up to you. The EA is $99, right? the EA does everything. It automates all my strategies. So if you buy the EA, you've got every single strategy you could ever want to trade in one EA. And then you don't have to have any other indicators or anything else. If you want to trade it manually, you can do that without the dashboard. And all you do is every 4 hours, you come and check your chart and see if RSI is extended. And you draw up a little watch list of Aussie dollar, US dollar is quite close. But all I would do, and this is what I used to do in the olden days, was every 4 hours, I would have an alert in Outlook. And what I would do is come into the charts and go, right, not extended, not extended, not extended, not extended, not extended. That one's just got extended. I missed that one. I was asleep. Never mind. Got not extended, not extended. It's getting close to being extended to the upside. So I might want to watch this one. If the CAD Swiss gets to that high, I'll set a little alert there. There we go. There's an alert, right? CAD Swiss, CAD Yen. And that's basically what I would do. And all I'm doing is flicking through and just seeing if there's any RSI extensions in the 4 hour. It takes you 30 seconds to a minute every 4 hours. And then what you do is wait for a reversal alert on the 15-minute chart if you're trading H4M15. And you can either place a pending order or you can buy the market reversal alerts indicator, and that will give you an indication when it goes. It will give you an alert. So you could buy the RSI dashboard and the market reversal alerts indicator, and that will give you the full H4, M15, H1, M5 mean reversion strategies. Or you could spend the same amount of money on the EA and let the EA do the whole thing for you, fully automated. And then all you do is manage your portfolio. So all you've got to do then is look at your trade manager dashboard and see where you are, how you're sitting. Yeah, and this is what I do. I just basically watching this thing all day and watching this and banking stuff. Because the EA is taking all these trades for me automatically. I don't need to do that. But it's up to you. There's no right or wrong. You can trade everything manually. But mean reversion is, I would say, as Diarman's just said, mean reversion is probably the best place to start. And that's my bread and butter strategy. H4M15 is my bread and butter. However, I've more moved over now onto H1M5 because the market is much more contracted now. Our ADRs are so much tighter. If you look at the ADRs running down here, most of the ADRs are single digits or low hundreds. We used to be trading 200s to 400s on ADRs. So the market movement is contracted a lot more. H4 RSI extensions are a lot rarer than they were over the last sort of year or so. So I'm favoring H1M5. It's exactly the same strategy, except you're using hourly RSI extensions and M5 reversal alerts instead of 4-hour RSI extensions and 15-minute reversal alerts. So it's exactly the same strategy. And then use the same daily trends for directional bias, or just use the bias scorecard. So just look for everything that's a strong buy and sell, and literally just trade those pairs with H1M5. And you won't go far wrong. But yeah, I don't know. It's up to you. You know, it's all down to individuals. Like I say in the bootcamp, you don't have to buy any of the indicators. They're all there to help. But some people don't need it. You know, it's only drawing market structure, really. So it's actually good not to necessarily use the market reversal alerts indicator, I think, sometimes, because it helps you to identify market structure yourself. You know, so I can tell you there was a reversal alert there. Yeah. I can see it. I can see the reversal alerts myself on the chart. After a while, you won't need the reversal alert indicator. There's a reversal alert there off of that candle and a retest. Yeah. But it's much easier having it on there. And that's why I have it on there, because I'm just lazy. But yeah, there's no right or wrong, up to you. But if you buy the EA, as I say, the EA does everything for you. So the EA is the indicators. And if you're trading ADR, it draws ADR on. It shows you the RSI extensions, how extended RSI is. It gives you all the data, everything in one EA. The EA is the ADR indicator, the RSI indicator, and the market reverse alerts indicator, all rolled into one thing that actually can trade the market for you. So it's the God thing, if you like. It, you know, just does everything. Diamond, yeah. So do that for at least a month, and having to deal with at least one squeeze. The mechanics of the strategy are not too difficult. The hard part is dealing with the squeezes. Yeah. So, yeah, and actually one of the things, if I was going to buy anything, to be honest, it would be the Trade Manager dashboard, because there's nothing else out there like this that you can use to monitor multiple positions and see exactly where your portfolio is. We're position trading, so this is important because I need to know how many positions I've got on as opposed to what my drawdown is. I need to identify quickly where I need to start dealing with drawdown control, and how much I've got to deal with. So the bigger this gets, the less worried I am about that. So this is actually a much more important visual tool than anything. Yeah, so all my strategies are on the Market Reversal Alerts EA. So all the strategies, not all of them, not apart from the opening range breakout. So the trend pullback strategy, the mean reversion strategy, yesterday's high-low, hedging, and ADR reversals. All 5 of those you can trade with the Market Reversal Alerts EA. So that has filters in to be able to execute all of those strategies. There's set files for them here. So this explains all the strategies, and all the set files are here. But you can obviously fine tune it to do what you want. And it does all the drawdown control for you as well. So, you know, where you're doing drawdown control is one of the harder things to execute for people when they start position trading, because you're in a, what have I got on at the moment? US dollar yen. What the hell's US dollar yen? So one of the hardest things is not holding on to the trade. So the break even on this is there. So one of the hardest things with position trading is when you get into multiple positions is letting it run into profit. There's an urge when it gets back to there to go, phew, I'm out. I haven't lost any money. And if you do that, it's not a bad thing, because what it's doing is it's teaching you how the market moves. So worst case scenario, if you did position trading for an entire month and all you did was come out at that break-even point at the end of the month, you've progressed because you've not lost any money. And if it's very easy to do that, very easy to do that, because you get to break even on every trade within 1 or 2. If you take in no more than sort of 2 or 3 trades at a time, you'll always get a break even exit. So what that will do is it will show you how the market moves. But the EA, if you let the EA do it for you, you can set it basically to get out at break even, or you can say, do the drawdown control for me. So this is set up to do drawdown control when we get into 0.75% in drawdown of ADR, it will take 1/3 of the position off. So this will automatically scale out of my positions for me when the market goes against me, keeping my moving average nice and close within ADR. So it does everything. So everything you learn in the bootcamp is all incorporated into there, into the EA. I wouldn't say it's the lazy way of doing it, but it's the foolproof way of doing it. It will stop you getting in too close on your positions. That's another big thing. Diamond's got a set. What's your set of rules, Diamond? Diamond's got a set of rules where every time he breaks those rules, he gets into pain. One, it's being taking trades too close together, taking too large a lot size is another one, and there's something else. But basically, if you use the EA won't let you do any of that, because the EA will automatically calculate your lot sizing for you. Sizing, exposure, spacing. There you go. So I've broken one of those rules at the moment. I'm going to get told off in a minute. Look. So I'm actually short too many pound pairs at the moment. Sizing, exposure, spacing. So lot sizing, making sure that that is right. So the EA for me is set up to risk 0.25% on half an ADR. Yeah, 0.25% of my balance on half of an ADR movement. Spacing, it will only get into new reversal alerts if the market goes against me when we are at least half an ADR away from the initial entry. So it keeps my spacing automatically done for me. So if we get a reversal alert here, it's very tempting to go, oh yeah, I'll get in. But what you're doing is actually doubling that position size. When it pushes against you, you've now got twice as much drawdown, which makes you more pain more quickly. And exposure. The EA can't do exposure. But what you do is you make sure you only put it onto trades, onto pairs that you want to trade. So the way to do that is look at the directional bias scorecard and just pick the top buys and top sells. Yeah. So if you want to trade US dollar, go long US dollar CAD, long New Zealand CAD. Right? So you can't trade any more in the US dollar. So you can't trade that. You can't trade that. If you want to use the yen, go long euro yen, New Zealand yen. Yep. So now you can't trade any more yen pairs. You've also used up your New Zealand dollar exposure. So you can't trade any more New Zealand dollar. You've also used up your CAD exposure. So you can't trade any more CAD. So New Zealand US is out of the question. Pound New Zealand, you can't trade because you've used your New Zealand dollar exposure. Pound US, you can trade. No, because you're US dollar Swiss, so you can't trade that either. Aussie New Zealand, you can't trade. Aussie US, you can't trade. Euro US, you can't trade because of the US. So you see that entering those four pairs double exposes you on multiple instruments. Dow is collapsing. Yeah, I've just gone short on the Dow. Well, I've been rabbiting on. So then you can pick some other pairs, but basically just make sure you don't overexpose yourself. And this is what the Trade Manager dashboard is there for. I'm overexposed on the pound. I know I am, and it's an accident. I just really, really liked the euro pounders along. But I will manage that myself. The reason I'm overexposed is because I don't care, because I've got a really nice, decent amount of profit. But yeah, so, you know, just it's up to you. How you trade it. There's lots of ways. Ah, you're kidding me. Missed the short. So my EA turns itself off after 1.5 hours. So that'd be my cutoff. Never mind. So nice short. NASDAQ will have gone short as well. Collapsing. Right, so the gap fill's in play. So watch the gap fill on both of these. Where was it? Oh, we've done the gap fill. We've way done the gap fill. Look, there we go. So that was the play, gap fill. NASDAQ has just done it. There you go. I had the right idea this morning, but it's taken all day to execute, unfortunately. That was a messy trade this afternoon. Never mind. Drawdown control is like pruning. Yeah. And this is why it's good to let the EA do it automatically for you. If you let the EA do the pruning for you, you haven't got to worry about it. Look, I'm sitting here and I've made a 0.5 loss over the last 2 days. All completely automated. So all it's doing is it's scaling out of these ones that are going too far against me, like the CAD Swiss, and just getting rid of that for me. Yeah, and that's the beauty of automated drawdown control. Yeah, look at that. I've got 1, 2, 3, 4, 5, 6 trades. No, that's wrong. That's by time. Sorry. Let's go the other way. 1, 2, 3, 4 trades there in a row, which are all losses, but they're percentage losses. So what that's done is it's just brought the averages back in reaching distance so that next push we get out. But having your EA do that for you is a massive advantage than doing it manually. It's really hard to take a loss. When you're position trading, what tends to happen, I will go and have a look at the other pairs in a minute, but when you're position trading, what tends to happen is when you start, you get, like, you'll take a trade, it will go against you a little bit, then you'll take another trade and it will sort of do that. Yeah, and then all of a sudden that one will go up and you'll bank it and you'll make green. Yeah, and then this one will go up and you'll bank it and you'll make green. And all of a sudden then you're flat and you're like, oh, I just won 2 trades in a row. And then you'll take another trade and it will go against you. And then you'll take another trade and it will go that way and you'll bank that one. And this one will still be down there. Then you'll take another trade, that will go into drawdown. This one go further into drawdown. You'll take a set and it will come back, it will get into profit and you'll bank it. And then you're just sitting with one trade in drawdown and you're thinking, this is amazing. I've just had 4 out of 4. And all of a sudden you'll think, this can't go wrong. And then you'll get one trade you'll take and it will go into drawdown. You'll take a second, it will go into drawdown. You'll take a third, it will push up slightly against you and you'll be like, this is brilliant. And then it will go boom. And you'll have to take a fourth. That is the trade, when you get that trade, that you will struggle to, when it gets back to break even, not take that off for no win. And you will struggle to do drawdown because you've just had 4 in a row and you're on absolute cloud 9. And the thought of taking half of that position off as drawdown control and using some of this profit to pay the market back is the horriblest thing in the world. But you've got to do it. If you don't get on top of drawdown and you get into a squeeze, that trade up there will be sitting in $1,000 or something ridiculous. And that one will be sitting in $800. That one will be sitting in $600. And it will happen. However, if you keep on side with what we're expecting the market to do based on fundamentals, you will get into very few squeezes. So, but it's really hard. And that's where the advantage is of having the EA, because the EA just, without, I haven't done anything today. It's just helping me out. It's getting me out of these positions. It's saying, Lee, you're an idiot. Get out. And it's doing it. And I haven't got to worry about it. It's really nice having it do it for you. That's why I like the EA. And people that start, I sort of say, well, don't buy the indicators, just get the EA. You know the strategy, draw it on the charts if you need to, but let the EA trade it because it just helps you so much more. Anytime you break any of those rules, by definition, it's an aggressive entry and you need to use a stop loss. Yeah. So like the other ones just said, if you break your sizing rule and you get in too hard, too hot, too heavy, you will get into big pain on a position and you will need to do an aggressive drawdown control, which means you're going to need to take a large position size. So here, for example, I've got 3 contracts short on US dollar yen. For an aggressive position on that, I'm going to have to go 1.5 contracts short. Big size, and I'm going to need to use a stop. If that stops out, it's going to cost me. So when you break those sizing, exposure, and spacing rules, you will teach yourself a lesson by having to do aggressive drawdown control. And it's not nice doing aggressive drawdown control. When it works, it's absolutely beautiful. You can make an absolute fortune with it. But the idea is not to have to do that. Try not to do it, and then you'll be fine. And the EA will keep you in that. This is collapsing beautifully. Look at this break I've missed. I'm really annoyed. Never mind. What do we say? Climbing up the stairs, falling down the elevator shaft. Anyway, where did I get to? Yeah, CAD Swiss. So I've covered all the Aussies basically. Aussie dollar, US dollars are short. It's a short, so it's already gone today. But I'll be looking for any kind of pullbacks, any RSI extensions to the upside. Everything US dollar, I want to be trading in line with the US at the moment. So I'll be looking for shorts up there if we get them. Possibly Asian high or that level maybe. Yesterday's high would be good, but we're not going to get there today, so no trades. Market opening, I've the feeling the first breakout is always a fake out. Sometimes it is, sometimes it isn't, Philip. It's the trouble with your statement is which breakout. this is the problem. When you're looking at the opening range breakout EA and the opening range breakout strategy, there's multiple ways to trade it with a 5 minute, 10 minute, a 15 minute, or a pre-market, or you could use a 30. Which of those is going to be a fake out? You know, so if the 5 minute is a fake out and then the 10 minute is the break, if you'd have traded the 10 minute breakout, you wouldn't have seen the fake out. See what I mean? It's impossible. There's always going to be movement at the open. Sometimes it goes like that at the open. I've caught moves like that which have made me 6K in one trade. And it just goes. And you've just got to get into them all. The ones that you get whipsawed and mucked about in, like I did today, move on. Tomorrow we'll get one of those and I'll make it all back and some. You just got to play the long game with breakout strategies. Because like you say, there's a lot of fake outs. You know, if you take the fake out short and the fake out short ends up being a pullback long, you're going to get stopped out. There's no right or wrong, is there? You can't win. You just have to get into trades. Some you win, some you lose. CAD Swiss, looking for shorts on that one. So looking for a pull up into ADR. We've covered this one, haven't we? The ends, Euro odd. So Euros, all the Euros are potentially longs. If you're like 1.5 hours late for the market open, yeah, I know, this is the trouble. I'm beginning to hate the open. I love the strategy. I just hate the pain. Like I say, running the EA is absolutely fine. I'm not looking at it. I've got the EA running. I'm not looking at it. It's absolutely fine. It's when I'm looking at it, it drives me nuts. It's not a strategy I'm very good at trading manually or watching because it's too much stress. Papa, if you have big pockets, example 200K, and happy to earn 10K a month, your account is very hard to blow using the EA. Yeah. Yeah, I mean, you need some money for position trading. It's very hard to trade on prop as well because of the drawdown. I found a new prop firm today. Let me find them. Did I close the window? No, I didn't. Right. This is a new company. I'm not convinced, but I like their rules. I don't like their prices. Just going off on another tangent, right? So these guys came up on my timeline on Facebook today, right? So whenever I come up with a new company, first thing I do is a who is search and see who and when they are, right? So registered June 2022. So it's a new company. It's less than a year old. The website is less than a year old. It was registered with Ionos. I'm not going to hold that against them. Yeah, so basically it's new. So it's less than a year old. So no established history. They've got no real massive socials either. So if you look at their socials, doesn't go back massively far, and it's all basically adverts. So there's not really a lot of social interaction going on with them either. They've got an Instagram. Website's pretty basic. They've got lots of reviews you can't click on. Yeah, these are all Trustpilot reviews, right? So why are you not giving me your Trustpilot feed? Yeah. So not sure about this. I'd have to go and look them up on Trustpilot. Let's do that, actually. This is how I check out new companies. Because their offering seems pretty good. I can't spell Trustpilot, look. 4.4, 5-star, 93%, 30 reviews. Absolute scam. Took all my info, approved, funds on the way, nothing. I can't even get a response. Company's a complete scam. Hi there, I believe you have the wrong company. You are looking for instantfunding.ca. Who the hell's that? Instant loans? Don't know. only portfolio that has split in favor of the trader, instant funding, no BS, payouts either, blah, blah, blah. Amazing fast support, da, 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 da. So this is January 23, January, October 22, June, July 22. Right. So they started in June 22. So it looks like, yeah, that might be legit. Basically, the difference between these guys is it's instant funding. And the other thing I don't like about them is as well, I'm a web designer by trade, right? When I come across a website like this and you've got accordions, when you click on them, they don't work. I have to say, come on, really? These accordions are opening. There's a little down arrow, right? Nothing's happening. If you've got bugs like this on your website, you're a 2-bit company. Sorry. But anyway, so it's really hard to get to the actual bit that's interesting, but they only fund you with a small amount of money, but this is instant funding. So you get paid instantly. So if you get this $1,250 account, right, and you grow it by 10% in 3 trades, for example, I can withdraw it immediately, right? So there's no evaluations. That's the difference. Trying to get to the bloody bit where the amount of money is really hard work. I had this trouble earlier. You have to press that. There we go. So a conventional account has a drawdown of 5%, but there is no trailing. Okay. So normally when you have a 5% drawdown, when you grow your account, the drawdown grows with you. The 5% is the 5%. So if you take a 10K account with them, you've got a $500 drawdown. So your drawdown limit is 9,500. That's it. That never, ever changes. So it's fixed. So when you grow this account up to 12K, you've got $2,500 of drawdown. You can have open, right? I'm thinking position trading. You can have that open with them. Downside is the cost, but it's instant funding and instant profit split. Oh, sorry, max drawdown is 8%, yeah, on the conventional account. The other accounts they've got are the aggressives. The aggressives have a smaller drawdown, yeah. But the difference with these is when you grow them by 10%, they double that, and you can draw the money out. With these, when you grow this by 10% up to 1,100, they will double it to 20K for you, right? But you can't withdraw any of that money. So you get a better profit split, but you can't draw it out if you want to double it. These, you get a slightly worse profit split and a worse drawdown, but you can withdraw immediately. And if you get to 1,100, they'll double it and you can take that money out. So the problem is, if you want to trade with any size, it's going to cost you $2,849 for a 40K account. But basically what you're buying there, yeah, what you're buying with that $2,849 is a $4,000 trading account, because you've got a $2,000 trading account because you've got a 5% drawdown. However, you've got the opportunity to double that to 80K by just making a $4,000 profit. So these guys, and the thing I like about it is this doesn't move. It's static. There's no daily drawdown limits or any of that crap. No trailing off of your maximums and all this sort of rubbish. So it's instant funding. So I came across these and I just thought I'd point them out. I made a note to point them out and I completely forgot. But they're so new and I have heard nothing about them. There's no Telegram channel, no Discord groups. As I said, their Facebook is really dodgy. So I don't know. But to give them a go, it might be worth a crack just to see what happens. They pay you out by deal as well, the same as my Forex funds and all the others. So the payment system is exactly the same. So might be interesting to look at, but they're new. I've never seen them before anywhere. Instantfunding.io. So go and check them out if you want at some point. They've got a winter sale on, basically, so you get cheaper funding, but you're not going to get much. Yeah, for 369, you're going to get 5K, but that's really all you get anyway. you know, it's a $500 trading account really, but if you can hold this without hitting the drawdown, you can double that. I could double that pretty easily, I reckon. 10% target is not hard to hit. A couple of decent opening range breakouts, you can do that. So I reckon you can double it quite quick and get up to a decent size with it, and then trade it normally. But we'll see. Anyway, just thought I'd point them out. A lot of money to position trading with good return. Yeah, that's the problem with position trading. It's very difficult to do with funded accounts. Very difficult to do with funded accounts. It's not difficult to do if you over leverage and get lucky. That's what you've got to do. If you want to use a funded account for position trading, what you've got to do is over leverage to pass it, and then scale back to normal position sizing. Big Papa, can you advise the best approach to tackle prop firm challenge using your stuff? There isn't really. Prop accounts you really need to scalp, or you need to swing trade. If you want to pass a prop, really, you need to be trading H4, H1. Do you know what the easiest way to pass prop is, in my opinion, is just using support and resistance bounces. So just like, for example, here, that high, draw a zone. Yeah. When it rejects in that zone, so this was yesterday, using H1, when you reject in that zone, drop down to M5 and take the first reversal alert you get, which would have been here. Normally you would get a tighter reversal alert than that, but that's just a big wide one because of the strength of that move. But that, I think, is the easiest way to pass prop. Or use H1. Well, it's the same thing, isn't it? It's H1 M5, but using support and resistance, and go in with high leverage. Yeah, go in with a 1% risk on each of your trades and hold them for a 2-to-1. You only need 4 trades that work. And H1 support resistance zones, yeah, don't use a stupid stop with them as well. Use a stop that's a decent distance away. So if you're getting in somewhere off of here with a stop up there and you get a 1-to-1, that's the way to do it. Not get stopped out. Thoughts on Profits FX platform? Or use the opening range breakout EA. I've passed prop with opening range breakout EA twice. Actually, no, I haven't. That's a lie. I've passed once, and I've passed at one stage once and failed second stage. So you can use the ORB EA to pass prop. Just over leverage. You know, if you go in with 0.5% risk, and if you use the 5, 10, 15 and you get multiple entries at one level, you're going in with a 1.5% risk short. If you get a flush like today, with a 1.5 risk, you've done half your evaluation in one trade. You just got to be lucky. This is what I always say with prop firm evaluations. Your pass is not whether you're a good trader or a bad trader, your system is good or what. Your pass is whether or not the market agrees with the trades you take. If you've got a strategy with a 50% strike rate, and when you start your prop evaluation, you have a losing run of 10 trades, and then the next 10 win, you've failed your prop firm evaluation. If you start it the next week, you would have passed. It's all to do with when the market gives you those wins and losses. If you were to use support resistance bounces on the 4-hour chart, yeah, so you use that as your support, your resistance. You took that one and that one, happy days. If you'd have been doing it on another week when we went into a trend, you would have failed both of those trades. See what I mean? It doesn't matter what strategy you use. Press the buy button now with 3% risk with a stop loss down here. If this moves back up into the top of that propulsion gap, you've just done a 6%. You've only got to do 8% to pass the evaluation. You can do it in one trade. You just need to get lucky. You need the trade to work. That's how prop works. They know that. They know damn well the best traders in the world are going to have a losing run at some point. Profix FX platform. I never heard of them. Is this them? This is a broker. That's not a prop firm. I don't know who they are. That's a broker. It's not a prop firm. Oh, Profits FX platform. Oh, I've no idea. I've never heard of them. Never heard of it. Don't know. Website looks archaic. They've got no regulatory information at all anywhere. I would be a bit cautious about these guys, to be honest. Very cautious. I can't even read what that says. So unless you're not in the UK, I would give them a wide berth if I were you. I don't know. I can't read the website, so I can't use them. If you had to be lucky, then how sustainable can it be long term? It's not, Big Papa. And that is, you've probably not been in here when I've been talking about prop. It's not sustainable. I can't. Blog. Can't type blog. Oh, they've changed it. Oh, that's annoying. Just trying to find an article just to show you the statistics. There we go. So, number of traders who reached 8 or more payouts but lost their account in February, 6. Right? There was 2,708 individual payouts. There were 7,018 new live funded traders. This number here should give you an indication of how many people hold on to their accounts, right? The statistics are that less than, I think it's 0.13% of people that pass a stage 2 evaluation hold their account for more than 3 months. The vast majority of people will blow their account before their first payout. Think about what is happening in prop. You have to have, for example, my Forex funds, right? You have got to have a lucky week of 5 days to pass phase 1. Then you've got to have a lucky week of 5 days to pass phase 2, or 10 days, 15 days, 30 days, depending how long it takes you to pass phase 1 and pass phase 2. So you have got to be very lucky and very consistent and stay within a 5% daily drawdown for roughly 2 to 4 weeks. That is bloody hard work. There's not many people that can successfully stay within a 5%. It's hard work to get past the evaluation. Then when you get a live funds, you've got to do that for a minimum of 2 weeks before you get paid. You've got to sustain that. Most people, 90+%, when they get their stage 2 evaluation passed, will blow the account in week 1. Because you will over leverage to pass the evaluation most of the time, because it's hard work to do 8% in a week. But that's what they set you as a target. So think about this, right? As a trader, how easy is it to make a 16% return a fortnight? Or even a 16% return a month? And then do that consistently for 2 to 3 months. Ask yourself this question. If you could do that, Do you not think that Warren Buffett, bearing in mind his average return is 12% a year, would be snapping your arm off and giving you $100 million to trade with? Doesn't happen, right? So what you have to do with Forex, with my Forex funds or any broker, any prop firm out there, is you have to take phase one evaluation and over leverage it. Take as few trades as you can with high risk, 1%, 0.5%, maybe, or even higher than that, 1.5%. Yeah. And you have to hope that you get 3 or 4 lucky trades out of 6, 8, 10 that get you over that line. And then you stop and you just take little trades every day until you need to get through their daily target. Then you do the same thing on phase 2. When you get to phase 3, i.e. funded, what you do is you drop your risks down to 0.2% or 0.25% per trade maximum. Because you are so used to earning 8% return a fortnight, because that's what your evaluation targets are. That's £8,000 a fortnight, $16,000 a month on a 100k account. You're so used to earning that, that's what you'll do here. The chances of you having 3 lucky streaks, which get you over the line with 1.5% risk, are infinitesimally small. That's why these 6 traders have managed to hold their accounts for 8 payouts, 3 months. You get paid every fortnight, right? 6 traders out of 7,000 managed to get through to 3 months. It's just not happening, right? So what you do, the way you use prop, is you work out how much it's going to cost you to pass your evaluations. So what I do is I will take 3 evaluations quite often at a time, not necessarily with my Forex funds. I trade with E8 and other people, but I will take multiple evaluations on 100k and 50k accounts, right? So I will spend around about 1.5k around, and I will take multiple evaluations. I will fail most of them. I will pass a couple usually, right? Out of the couple that I pass, I will over leverage on both of them. And hopefully one of those accounts, I will be able to trade it up to somewhere around about 3 to 5k. And I stop and I wait for my payday to come and I withdraw it. So I spend 1,500 on evaluations, fail most of them, get past a couple, trade one of the accounts up to 3 to 5k because I have a lucky run. Yeah. And then I draw that money out. So I bank 3.5k profit. Rinse, repeat. Because you will not hold the accounts unless you drop your risk down to something like 0.2% per trade, because you're not going to have a lucky run. You're going to have a losing run. And that's going to hit your 5% drawdown if you trade with 1% or 0.5% of risk. If you trade with 1% risk per trade and have a losing run of 5 trades, happens a lot, all the time. Everybody in this room has had it probably this month. You've blown the account. You're dead. You can't do it. You've got to trade with tiny risk. So on a 100k account, if you want to hold it for anything more than a month, you've got to trade tiny risk, and you're only going to return something like 2.5k in profit max. But it's much better to go for it and get that 3k done in a couple of weeks and then start again. I can draw, and I have drawn 15k a month out of prop, but I blow the accounts. I blow them all. I always blow them. You should see my list of accounts in my Forex funds. I've got a list as long as your arm of blown accounts. But I've drawn money out of it and I've made a profit out of it because it's just a business. I spend $500 3 times. One of those gets through to funded, right? If I can make anything more than $1,500 out of those 3 accounts that I've got, I'm a winner, right? An opening range breakout with 0.5% risk that works first time makes me $4,000, 4k. So if I get past my evaluation and the first trade I take with the ORB EA is a trend breakout, I will make 4k. I stop that one trade and I wait 2 weeks and I take that money out, and then I set the ORB running again, because the danger is if tomorrow's ORB goes like that, I'll lose 2.5k. If the next day's ORB goes like that, I'll lose 2.5k. That's 5k of drawdown, right? So I've now got to a position where I'm a negative 5k on my account. And what I've got to do now is have 2 ORBs going in my direction before I can even get to where I might make money again. So I need 3 in a row. It doesn't happen that way in trading, does it? So those are the 2 options with prop. Either you do what I do and take multiple evaluations. I've always got evaluations on the go. And you just basically get through them and you get one and then you bank it. Or when you get your account, you're still going to have to do multiple evaluations. You then reduce your risk right down and you get 3 to 4 or 3 to 5 funded accounts with a decent amount of money, whatever you want. And you trade them all with very small risk, 2%, 0.2%, or 0.5% would be your absolute max. That's 10 trades a day. That's the maximum you can have, because if you have 10 losers in a row, you're dead. And everyone's trading M5, aren't they? That's what they're trying to do. So that's basically the way you need to look at it. Does that make sense? It's not easy holding a prop account. My own accounts, I don't care. I'll sit in my own accounts on 10 to 15% drawdown. Absolutely no problem at all. That's what it's there for. My money's there to be drawn down into because it's called risk. But they don't let you do that, which is what attracted me to this company, because I was like, oh, I can have 8% drawdown. That's interesting. So now all of a sudden I've got 8% drawdown I could stay within. Look at what I'm doing with this EA at the moment, right? I mean, this one, I've made 6% return so far with a 2.27% drawdown. So I can close this out right now and go, thank you very much, I'll take my 4K. But if I've got an 8K drawdown in total, or 8% drawdown in total, I could probably position trade with that. So, but that's how they work. FTMO or Forex funds. My Forex funds I prefer by a long shot. I don't trade with FTMO. I have traded with FTMO, but my Forex funds is better. You get paid faster. The rules are less strict. The back end's nicer. It's just better, I think, my Forex funds, personally. And also, I think it's cheaper. But, yeah, look at them all and pick the one you want. Cam, 5 or 10K would work with position trading to start with. No, this is the thing. With a 10K account here, for example, you've got $800 drawdown available to you. And you've got to make $1,000 to double the account or to get past. Or not, or just, you just need to make $1,000. But this is instant funding. So put it in the back tester, right? If you try and position trade with this, a typical position trader will make, to start with, somewhere between 3 to 6% a month. I make on average, around about 10 to 15% a month normally. I have the occasional month where I make 20 plus, but most of my months are around about 10 to 15%. If I'm going to trade with a 10K account, right, I'm going to make $1,000 to $1,500. My mortgage is £1,600 a month. That doesn't even pay my mortgage, right? So I can't do it. I need bigger accounts, and I over leverage on my accounts. So it depends what you need to earn. But my Forex funds, if you can get 3 50K accounts passed, that's 150K of funding. Now, if you're making 10% a month, that's 15K. That I can live on. That's not a problem. However, trying to do that and stay within a 5% daily drawdown and 12% max drawdown on the accounts is very difficult. It's not easy. This is not an easy job at all. I'm having a hard time passing right now, going nuts. Yeah, it won't stop. I blew an account when we started, didn't I? I passed phase 1, position traded, passed phase 1. However, that account that I passed was 100K, wasn't it? So I got 8K, 6K of that was position trading, 2K of it was index trading. The second stage of the account, I had an unlucky run on the indices and lost a few K trading the indices. And then the drawdown I had on the position trades took me over the 5% daily drawdown limit. So I blew it. Which is why I stick to one strategy on an account now, ideally. But I still blow them, But overall, it's a long-term thing. You've got to look at this industry as a long-term thing. Everybody's trying to win the Lamborghini. They're trying to beat the market, get the Lamborghini. They're looking at all these guys on Instagram driving these cars that they've hired for the day and to make them look rich and taking pictures of the trainers they've tried on in a shop. It's all a load of rubbish. Everything on the internet is rubbish. That isn't the real world. The real world is you need to look at this as a long-term thing where you will not get paid the same amount of money every month. I have months where I make a loss. I cannot pay myself. Yeah? Imagine that. Can we pay the mortgage this month, love? No. Why? I made a loss. Shit. Get another job. No, it's just a loss. Don't worry. I've got 12 months in the year. I'm going to make 2 losses. Don't worry. The rest of them will be profitable. You've got to get that mindset. And that mindset means that you're going to blow these on a regular basis. But the ones that you don't blow, you're going to milk and you're going to make loads of money out of. So you just have to use this as a cost of business, right? So if you were to set up as a trader today, day one of your trading career, how much capital have you got to trade with? If you cannot answer that question with a minimum of $5,000, you cannot be in this industry. Because you can't start a business without capital. Everybody tries to go, I'll go in $500, I'll double it, double it, double it, double it. Impossible. Show me someone that's done it. There's a guy on the internet that sells a course on how to do it. Yeah, it's $1,000. You got to pay $1,000 to get the course to show you how to double your $500 account. Yeah. So you need $1,500 to learn how to double an account. You see what I mean? It's all geared, the whole industry is geared about milking your money. So unless you've got a big amount of capital, you can't make it in this industry, unfortunately. The only way you can get capital is getting it from these guys. So what you need in your bank account is a $5,000 balance, and you need to spend it on 10 of these and hope that you get one of them over the line. And that one you get over the line, you need to make more than 5K on it. Does it sound like a good career now? It's not, is it? It's hard work. But that's the real life. That's what real traders go through, which is why I love trading my own capital, because I have no restrictions at all. I haven't got 100K in my own capital now, unfortunately. I only trade with a 30K account, but I use all of that leverage. So I trade it like it's a 100K account, and I go into drawdown on it heavily. But I know the market comes back and I can keep on top of it. So the 5%ers have 6-month time period, but max DD is 4%. Yeah, again, what's the point in that? Awful. 5%, 6 months. You got 6 months. You got to pass an evaluation, and it's just nuts. The reason I use E8, so the other firm I use is called E8, E8 Funding, right? The reason I use this firm as well is because there's no time limits. So phase 1, right? Minimum calendar days 1. I use these as my emergency accounts. So if I don't have a funded account, if I blew all my funded accounts, I can go to E8 and go and get an account. I've done it. I did it in the Telegram group. I passed stage 1 in the morning, stage 2 in the afternoon. And then I was funded by the end of the day with 100K. That's what I like about this firm. There's things I don't like about this firm, but there's lots of different firms out there. And if you're going to do this for a job, you're going to need access to more capital than you've got. And prop firms are the way to do that. But it's very, very difficult to trade prop firm money because of the drawdown. So you've got to be lucky. You've got to hit it at the right time. Yeah. So let's say, for example, today, you didn't trade the open today and you came to the market at whatever time that is at 5 o'clock right? And you were like, okay, we've pushed up, we've pulled back. Where do we think we go? Okay, what I'll do is I'll take a breakout short. Yeah, and if that was the only trade you took today, happy days. You just made an absolute fortune. However, I started trading here and I didn't. The difference between me passing a proper valuation is me trading this candle and that candle. If I traded this candle and got stopped out, I got stopped out there, I got stopped out there, I got stopped out on that long. Right, so I had 3 stop outs today. If I'd have started trading at 5 o'clock or 4 o'clock my time, I'd have only had 1 trade and I'd be sitting in, I don't know, $4,000-6,000 of profit now. That's the difference between passing and failing a proper valuation. The day you take the trade, the hour you take the trade, the market reversal alert you see at that time is the one that's going to determine your pass or fail, nothing more. And there's no way you will get X of those working in a row for you. You will some days, other days you won't. That's the reality. So you've just got to make sure that you are strict with your funds. When you get these runs, you hold them. When you get down to there, you take that 5K and you do not trade this account again. You draw that money out in 2 weeks' time when your payday comes around, and then you take the next trade. That's what I do. I build these accounts up. They sit there, and as long as I've got my mortgage covered and my bills covered on these, that's brilliant. I just position trade the rest of my money and I'm happy. That's the way it works. It's just, it's a nasty game though. Brian, I sort of relate to the airport scene from Dumb and Dumber. Money grab, rush to the gate, fall off the jetway. Yeah. It's the way it works. The whole industry of prop is geared up to make you over leverage. You know, this rule here is E8's secret weapon. Yeah. Minimum calendar days to pass. What does that tell you? I can get funded today. Excellent. What have you got to do to get funded today? Pass 8% profit target here, right? How are you going to do that? Well, I can't do it risking 0.5% because I'd need a 16-to-1 R trade. They don't come along very often, do they? But what I could get is a 1.5 R trade with 5% risk. Let's have a go at that. Pop. Got it wrong, blew it. Okay, next $500. Pop, got it wrong. Next $500, pass. Next high $500, pass. I'm funded. Next $500, pop, back to phase 1. That's what happens. Because these guys' rules are geared to make you over leverage and pass quickly. My Forex funds is just as bad, yeah? Pass in 5 days, yeah? They're encouraging you to try and do $8,000 of profit, 8% profit in 5 days. Yeah, that's over 1% return a day. That's not sustainable. You can't do that. I struggle to make 0.5% a day consistently. And that's the difference, consistently. I will consistently make 0.5% a day. That I can do, 10% a month. But they want you to make 10% in 5 days, which is gearing you up to make 20% a month psychologically. You won't be able to do it. So as soon as you start taking these, you are preconditioned to over leverage and blow accounts. And this is the cycle they get you into. Spend it, blow it, spend it, blow it, spend it, blow it, pass, blow it, spend it. And that's what happens. The people that make money, spend it, milk it, stop trading. Take it. That's what you got to do. No one can do it though. If you get to your funded level and you trade it up to 5K, for example, on your first day of trading by doing a couple of good opening range breakouts, for example, and all of a sudden you've got 5K in your account, you'll want to do that tomorrow because you'll be looking at it thinking, wow, if I can do that twice more, I've got 15K. That's 3 months' salary. But what will happen in reality is it's highly unlikely you're going to get 3 in a row. So you might get up to 7.5 and then drop it back to 2.5. And then you'll be like, oh my God, I've lost 2.5K. You haven't. You've made 2.5K, but your brain is telling you you've lost 2.5K because you had 5. Now you need to over leverage to get back there and pop. It's what we do. It's built in. It's just built into us, and they're very, very clever in the way that they do these rules. So you just need to unprogram yourself and realize what the game is and play it in a different way. That's a pity after hearing all these about prop firms. Reality check. Well, I tell it like it is. I always do. You know, that's why I've done my course. It's out there to tell you what the real world's like. But it's not. You can make money. You can make money. You've just got to play the game in a different way. Yeah, forget these expensive accounts. Yeah, don't go for these. They're just a waste of money. If you're going to take evaluations, take these. Yeah, practice passing down here. Play the game with small risk and achieve this. When you've achieved the percentage, then you realize after you've got funded with this and you've blown this, the reason you blew it is because you over leveraged trying to get that 8%. Yeah. If you can keep that for a month and make $250 profit or $500 profit, that's a 10% increase. Suddenly you'll understand the game. Everybody wants to go straight in here though, for the big bucks. Why? Because that's what you need to trade with. But you can't do it on day one. You've got to practice. I've got a lot of practice accounts. I think my best month was 18K, and I think I did 25 accounts. I put it in the Telegram group, didn't I? What I'd spent and what I'd made. I can't remember what it was. It's quite an old post, but I had 20 accounts past 5 or something. So past 20%, 25% of my accounts. Out of the 5 that I'd passed, I had 3, and that's where I made the money. But it was a hard work, and I was copy trading on some of them as well. So I was trading the same accounts, which is why I blew the multiple accounts. If you copy trade across 3 accounts, and they're all 100K accounts, and all those trades go wrong, you lose 3 accounts, not 1. So instead of that, cost me $1,500. Anyway, anybody get on this Dow? Well done if you did. I'll post this one in the Telegram group. I'm not on it, but I'll post it just to show the opening range breakout. So the ORB here, if you'd have taken the 15-minute, which is the original version, your 15-minute ORB is that. So you would have had one stop out long, and you'd have had your short entry. And I will be on that, actually. I'll be on that on one of my other accounts because I'm running the 15-minute ORB. I'm running it on the NASDAQ, actually. Not so nice on the NASDAQ. Still not bad. Anyway, that's really all I've got for you today. I've got to go because I've got to go out this evening, unfortunately. So I can't hang around to do the rest of the analysis. But there's not a lot, as I say, to look at really with everything. So it's all very, very sideways across the board. So ADR reversals work very well on Euro Swiss. That's a nice one today. So your ADRs have done well, your Euro Swiss and your New Zealand dollar Swiss. That's a beauty. Look, New Zealand dollar Swiss. There's your reversal alert, your retest. Lovely ADR. Trading ADRs is probably a good way to pass evaluations. Might try that. ADR reversals with a stop loss using 1.5R. That's probably a good strategy to use. Also can backtest that. Might have a look at that, actually. It might be a good evaluation passing strategy. But obviously staying in line with the bias scorecard. So just taking ADR reversals or 1 hour RSI reversals on these. Right. I'll be back tomorrow morning, 7:50, same time as usual. We'll have a look at all the rest of the markets. There's no news overnight to worry about tonight. Oh, sorry, no, yes, there is. Bank of Japan. So this is where we may get that pump on the yen, and all these yens are going to drop. Yeah, so just be aware of that overnight. The only other news we've got, obviously, is PCE tomorrow. So more volatility on the US. We got a negative today, so we'll see. If we get another negative tomorrow, we might get those pullbacks on the US dollars. We'll try to pass next live you do with you streaming. Yeah, go for it. If you can pass in a stream, that'd be lovely. I could pass in a stream. You know, this is the thing. These evaluations, you can pass an evaluation very easily by over leveraging, right? If you had traded the 15-minute ORB today with a 2% risk, yeah, you would have gone long and your trailer would have come in and kicked you out at probably actually, it kicked me out at 0.16 off of a 0.5, which would be, you would have got kicked out at something like 0.35%. And then you would have gone short with your stop here. So your risk reward on this trade was 90 pips for 2%. You're sitting in 248. So 248 divided by 90 times 2 that's a 4.75% gain on your account. You've only got to get 8% to pass. So you've lost, let's say, 0.5%. You've gained, let's say, 4.5%. So you've made 4% in one session. If you have 2 sessions like this, you've passed evaluation. It's really easy to do. But what you've got to do is be disciplined and let the thing play out. That's the hard thing. And that's why EAs are so good. The EA is trading this for me and I'm not even looking at it, and I know it's working. I know it's in profit. If I look at it, I want to shut it because I know how much profit it's going to be sitting in. And that's what I did with EA. Yeah, I traded the DAX in the morning, passed 8%. I over leveraged massively, obviously. And I passed the NASDAQ in the afternoon, 8%. That evening I got funded. Haven't got that account anymore. It was months ago. But anywho, so yeah, that's how you do it. And don't forget, with prop firms, you've got a 5% daily drawdown limit, right? So if the maximum ever you would want to take is 2% on one breakout. And what I would really do is actually split that into 2 1% trades. So you get in with one and you take some profit off on one, break even, and then take the runner. But you don't get these every day. These parabolic moves happen once a week. You just got to be on them. And that's the downside, is if your EA stops at a point, you miss it. So, which is why I have multiple accounts running multiple set files. Some of them win each day and some of them lose. And the ones that win, I stop trading them and I draw the money out. That's it. That's the game. Right, I'll leave it there. Anything you need, let me know. I'll be in the Telegram group. I won't be in the Telegram group this evening, so I'm going out. But I will be around, and I'll be back tomorrow morning, 7:50, same time. We'll trade the DAX, have a look at the markets in the morning, see if there's any movement on these yens. If you've got any yen pairs on that are in profit, I would look at potentially, depending on which way you are, taking profits on them, or at least locking some profit in if you've got it. I doubt you have got any profit on any yens pairs because they've just literally done that this week. So unlikely you're going to be sitting on a bankroll on anything yen. But we have taken liquidity on a lot of these today, and we are pulling back. So if this is the start of some yen intervention, and not Kuroda, I've got to get his name right now. It's not Kuroda anymore. It's Ueda. If Ueda comes out and pumps it, we'll get a decent move. So you may wake up to a nice lot of profit in the morning, which hopefully I will. Okay, so I'll see you guys in the morning. If you need anything, let me know. Otherwise, have a good evening. Hopefully make some money, and we'll see you tomorrow.